Bank of America analyst Vivek Arya joins us now. He maintains a buy rating, raises his price target, as they all are this morning, from 340 to 450. Why was this such a surprise, Vivek, to you and the rest of the street?
Sure, Sarah, a few things. We'll talk about the fundamentals, but I really want to, make this point that Nvidia stock is actually cheaper today than it was yesterday. Earnings estimates went up by 72%, and the stock is up a lot, but it's only up 25%. So on a forward multiple basis, Nvidia is actually cheaper today than it was yesterday. Now, as to what's driving this, right, to come to your question, I think first we are at the start of this really large market in generative AI, large language models. About $1 trillion of data center infrastructure needs to be transformed. It has to be converted to this new technology, number one. Number two, to be successful in this technology, you really need that end-to-end full stack computing. So you cannot just be a chip company. You cannot just be a software company. You have to be all of the above. And I think that's what Nvidia has shown, which is why they can monetize that trend in 15 to 20 times what a typical semiconductor company can. And then the final point I would make is focus, that this platform, which is called the GPU, is the one thing they do, not 20 things, just one thing they do, which is why there is a tremendous amount of leverage. You mentioned earlier in the program that there are a number of companies in the $1 trillion market cap club. Their average free cash flow as a percentage of sales is 19%. Nvidia is 35%. So it's not just driving sales growth. I think this power of focus is also coming through to the bottom line in terms of very, very strong free cash flow generation.
Hey, Vivek, we love to zero in on when notes are published on where we could be wrong or risks to the thesis. What are they here?
Sure. I think first is kind of a very broad market, right? I mean, there has to be market appetite to own large cap tech growth stocks. That appetite wasn't there last year. It is this year. So that I think is kind of a broader market issue. Then specifically, in the next 6 to 12 months, we are in this rapid investment cycle, whether it's hyperscalers, whether it's enterprises, they are investing in this new generative AI technology. Probably a year from now, they will look back at this and see whether they have been able to monetize all this. We think they will be able to, but I think in another 12 months, there will be a period when they will look back and see whether these investments, what has been the return on these investments. And third is supply. Nvidia can put up really large numbers. They are saying they have secured supply. But this is the kind of sales growth that we have not really seen before in semiconductors. It's going to require a lot of very strong execution from a supply perspective also with their partners in the Taiwan supply chain and the foundry and the back-end side.
Yeah, it makes you wonder about the geopolitics as well as a risk, right? With Taiwan, it's something Nvidia's CEO has recently warned about, Vivek.
Yeah, I think it's critical. Semiconductors is a global industry. Never helps to have geopolitical friction in a global industry. But my sense is that having multiple countries, regions participate with their own area of expertise, I think is what actually helps to grow this industry in a very mutually beneficial perspective. That you have a lot of design that is being done in the West. A lot of the manufacturing is being done in the East. A lot of the assembly is being done in the East. And collectively, the size of the industry, the first time it doubled, it took 20 years. The next time it doubled again, it took 10 years. So it's a critical global industry. And we think this cooperation between different regions is a must to keeping the size of the pie growing over time.